Welcome back to Bazaar Morning Call. The big global headline has been the fall in Brent crude prices because of some issues in the US as far as demand is concerned. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, Sonia, we've been talking about the crude oil prices, but let's not take our sight off from the metal prices because we have seen very sharp declines come in for this one as well. I want to talk about copper today because that is seen as a barometer of, international demand scenario going forward. And we have seen prices here decline by nearly 5% in the past 1 month itself. This is MCX copper prices, where as well we have come off from 740 of a high just a couple of months ago to 700 on your screens. We did see prices slide below this as well. In the international markets as well, we started this year with $8,600 a ton. We are just about holding $8,000 a ton at this point in time. That is going to be a very strong psychological support coming in on the charts as well. Well, the strength in US dollar index, the interest rates on the higher side is weighing on. So is the higher treasury yields as well. But apart from that, it also is about the Chile copper output, which has seen a surge in the past month and past quarter, which is weighing on to the markets. If you look at the LME cash for copper right now, that one is at a discount of $70 a ton to the 3-month futures. And this is the highest discount that copper has seen in last 31 years. So that tells you that if you want to buy copper right now today, you're getting it at a discount of $70 a ton. So that's the kind of no demand that we are facing in the global markets there. Also, when you look at the inventories itself on LME, that's at a 2-year highs at 167,000 tons. This has seen an increase of nearly 175% in the last 3 months itself. So the inventories have been rising. We also are looking at a discount coming into the markets because there's no demand really. And apart from that, the producer countries like Chile and Peru are recording higher production there. The International Copper Study Group has come out with data that says that in 2024, they're anticipating new and expansion of smelters and refineries in Indonesia, India and US. So there is going to be high availability of copper in 2024 is the reason that they tell us that in this year, while we are looking at a copper deficit globally at 27,000 tons, next year is going to be a surplus of 467,000 tons. Is the reason that you're not looking at copper prices going anywhere on the higher side. We still are trading in the negative for the month, for quarter and for this year as well. If you look at the refined copper demand and output, while we are looking at stronger demand in this year and even better in next year, but look at the kind of output numbers that we're dealing with, almost double of what you are seeing in sense of demand. So that also tells you that this is a space, copper is a space, which will really look at perhaps a weakness in US dollar, Chinese demand coming back, manufacturing data getting better. Until that happens, there is pressure that can continue here.
All right, Manisha, thank you very much for that. So that's Copper in Focus today.